Welcome back. This week, economic growth takes center stage with investors looking forward to updates on CPI data prints and GDP growth. Zaye Capital Markets' Chief Investment Officer Naeem Aslam joins us for a preview of the economic week ahead. Thank you so much for your time, Naeem. Quite a lot that is happening. I actually want to start off because we always talk about equities or economic growth, but never really Bitcoin. And there's been a lot of downward pressure on the Bitcoin prices. I think last time I saw down as much as 6.5%. And it all has to do with Trump. What's happening there?
Sure. Thanks for having me as always. Look, I think when it comes to Bitcoin, there was a lot of optimism with Trump, with the reserves, Bitcoin reserves that everyone was talking about. So there are two sides of the stories because people are saying, oh, Trump hasn't delivered to a point what he promised.
Yeah.
But there are two sides of the stories, and which is very much reflecting in the price action today. Number one is he always promised that I will deliver in terms of a Bitcoin reserve. So now the United States officially has something which we all agree on is Bitcoin reserve. He never kind of alluded that, yes, we will be using taxpayers' money to buy more Bitcoin, right? And then I think the market sentiment from that particular perspective is very much negative. Because, yes, the SEC director and the head of Treasury, they're both sitting next to Trump. They're both talking about that, yes, the United States has the Bitcoin reserves, but no one actually has a clue how are you going to acquire more Bitcoin without using the taxpayers' money.
Okay.
Because the whole equation boils down to two things when it comes to Bitcoin: supply and demand. We know there's a limited supply. There's only a certain amount of Bitcoins which are left to be mined now. So if you are not going to use the taxpayers' money today to buy Bitcoin, then that means you will be paying much higher price at a later stage. Are you seriously ready to pay a higher price for that? But then the other side of the coin is that they don't want to overexcite the market. They don't want it to bring too much optimism into the market because then the prices are going to shoot to the upside. So they wanted to buy low and then hodl it. So the other way of doing that was, okay, announce the Bitcoin reserve. Do not announce any details how and when we are going to acquire more Bitcoin. Let the market sell off and then acquire those Bitcoin and then announce that this is the strategy. But at the same time, what is happening with Bitcoin, and as you mentioned with the equity market,
yes,
they don't want to send a wrong message to the market as well, which is that, yes, the cryptocurrency market is much more safer than your equity market. Because if equity market, considering all the S&P 500 index, the NASDAQ, the Dow Jones, are down year to date, and then there's an intense amount of a sell-off, as you can experience in the market, the last thing that you want to do is to say, yeah, okay, now the crypto market is up, the equity market is down. Then all of a sudden, you are sending a very different message. So I think there are a number of parameters over here to look at. Number one, what Trump promised, what he has delivered, and what is next. Number two is the Trump's unpredictable nature. And with that particular aspect, what we are really talking about the tariffs. One day they are on, next day they are off, then the day after they are on again. So what we want to see is where we sit with respect to tariffs. Market will digest that. Market will adjust it. Valuations will come down to those particular levels. But looking at the price action, to answer your question, for Bitcoin, I think this could be the opportunity of a lifetime to acquire it where it is today. I am not saying that it is not going to go down from where the levels are trading it today, because there is a possibility with the continuous pessimism in the market, we will continue to drag lower towards the 75,000 sort of a price level or even early 70 handle. But one thing is for sure, Bitcoin prices are trading much lower than its mining cost, which is at 95,000. So if you wanted to bargain, now is the time.
Very, very interesting things that we are seeing there. But of course, it seems that a lot of volatility also coming through. And of course, we're going to see how the markets react to the imposition of tariffs on the steel and aluminium sector as well. Naeem, we also have this week coming out US CPI. What are your expectations of that? And really just the path that the Fed could take, particularly after we saw the jobs numbers coming out on Friday.
Yes, sure. So I think let's talk about the U.S. non-farm payroll. It came out on Friday, and it was an overwhelming number. In fact, it wasn't anything which can really make markets excited about anything. So now, the only argument, the only point the Federal Reserve can continue by keeping the same narrative, same stance in terms of the monetary policy is that, okay, CPI is still high, inflation is still above target. We are not going to cut the interest rate when inflation is still representing a huge headache. Not to mention how tariffs, if they are imposed to a level what they are talking about, how much of a headache they can create. But if the print this particular week shows us both on the PPI side and on the CPI side that this particular inflation is still very much anchored in place and it is still going to present a lot of headache, then the Federal Reserve Chairman Jerome Powell can say that, okay, we are going to continue with our stance. There is no threat for immediate recession, stagflation for the U.S. economy. Yes, there is a weakness in the jobs market because of the Dodge, because of Elon Musk, what he is doing and his initiatives, but there are no immediate threats to the market, so we are not going to reduce the interest rate. And of course, market will sell. Why market will sell? Because market loves dovish monetary policy stance. So from that particular perspective, I think the CPI number, if by any miracle comes less than the expectations, then we will see a huge rally. The market, which is selling off today, will look like a huge opportunity to buy.
We're talking about a sell-off. We saw that in Novo Nordisk shares. It came out with some trial results for its latest weight loss drug. Of course, we know them producing Wegovy and Ozempic. That is quite popular. What exactly is worrying markets there?
Yeah, so we don't necessarily cover the pharma stock in that much detail, but to comment on the entire sector, what I can say is with less regulations in place, with AI adoption and the use of AI, we're going to see a huge achievement, huge advancement that narrow down the timeline of any particular drug becoming a reality. So overall, I would say I'm highly bullish in the entire sector.
All right. And of course, we have seen those movements on Novo Nordisk and also Eli Lilly. So quite an interesting sector to keep a close eye on. Thank you so much for your time, Naeem. We do have to wrap up the conversation there. That was Naeem Aslam, Chief Investment Officer for Zaye Capital Markets, with the economic week ahead.